Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is September 12th and we're starting from euro-dollar pair with 10 lira. In general, the market is at standstill, and not just because of the absence of influence report and events. The US inflation report will be released tomorrow, which could provide answers about the Federal Reserve's future course of actions. And the European Central Bank's Governing Council meeting will take place on Thursday. In anticipation of such significant events, few will be willing to take risks. So the market will most likely continue to tread water. The EUR pair started to correct higher from the 1.0650, 1.0680 area, which acts as support. The euro's partial recovery has not resulted in crucial changes, and the downward cycle remains relevant. On the 4-hour chart, the RSI crossed the 50 middle line, thus reflecting an increase in the volume of long positions in the euro. On the same time frame, the alligator's MAs signal a convergence corresponding to the corrective phase on this pair. As long as the exchange rate does not return to the aforementioned area, the corrective phase will continue, making it possible for the euro to move towards the level of 1.0800. To extend the bearish scenario, the price should remain below 1.0650. In this case, the volume of short positions may increase once the pair reaches 1.0500. In terms of the complex indicator analysis, we see that in the short term and intraday periods, technical indicators are pointing to a retracement stage. Meanwhile, in the mid-term period, the indicators are reflecting a downward cycle. The next stage of our review is the next major, GBP USD, presented by Petar Yakimovic. GBP USD has been trading in the sideways range at the price of 1.2500. But we found rejection of the key resistance at 1.2540 in the background, which is a good sign for the further downside movement. Due to the short-term downside trend and the rejection of the resistance cluster, Petar sees potential for the further downside momentum. Downside objective is set at the price of 1.2450. MACD oscillator is showing weak momentum, which is normal since the market is in a range condition. Key resistance is set at the price of 1.2540, 1.2550. Let's trade with MACD indicator. USD JPY. Jakub Nowak would help us. The test of 146.28 coinciding with the rise of the MACD line from zero prompted a buy signal that led to a price increase of around 60 pips. After the pair reached 146.89, sales from this level resulted in a decline of approximately 40 pips. For long positions, buy when the price hits 147.12 and take profit at the price of 147.79. Growth may occur as the bullish market remains in play. However, when buying, ensure that the MACD line is above zero or is just starting to rise from it. Also consider buying USD JPY after two consecutive price tests of 146.66. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 147.12 and 147.79. For short positions, sell when the price reaches 146.66 and take profit at the price of 145.91. Pressure may persist amid expectations of significant intervention by the central bank. However, when selling, ensure that the MACD line is below zero or is starting to drop down from it. Also consider selling USD JPY after two consecutive price tests of 147.12. But the MACD line should be in an overbought area, as only by that will the market reverse to 146.66 and 145.91. Here is Laurie Bailey with AUD-USD pair forecast. Let's have a look. The Australian dollar has finally managed to break above the resistance of 0.6388, and at the same time, the Marlin oscillator has entered positive territory. Together, this signals for the pair's succeeding growth. The nearest target is 0.6493 level. Overcoming this level opens up the target of 0.6570. The resistance of the MACD line, blue line on graphic, becomes an intermediate target 0.6533. On the 4-hour chart, the price has settled above the balance line. It's a red line on graphic, and is currently trading above it, maintaining the market balance in favor of growth. The Marlin oscillator is gradually decreasing with a slight slope. A base is being prepared for a bullish breakout to overcome the resistance level of the MACD line, 0.6452, which was quite overwhelming for the price yesterday. Consolidation above yesterday's high, 0.6452, paves the way for the next target at 0.6493, then 0.6533. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Early in the European session, gold is trading around 1923, above 38 Muri level, and above the 21 SMA. On the 4-hour chart, we can see that gold is consolidating with a bullish trend channel formed since August 6. If the instrument remains above 1919, in the next few hours, we could expect it to continue rising, and the price could reach the top of this channel around 1930. According to the 4-hour chart, the bears are gaining strength in the short term. But overall, gold remains consolidated around 1920 and 1930. Gold is above the daily pivot point, which gives it a positive outlook. The key level is 1923, above which gold is expected to continue rising to 1930 and up to 1953, 58 Muri level. In case gold trades below 1919, a bearish acceleration is expected to occur. But for this, we should wait for a confirmation below 1915, which could be seen as a signal to sell, with the first target at 28 Muri level at 1906. The price could even reach the psychological level of 1900. Meanwhile, gold might produce a positive signal if it managed to settle above 1920. Then there will be an opportunity to buy with targets at 1930, 1937 and 1953. The Eagle indicator is given a positive signal. However, if the gold price falls below 1915, we should avoid buying. If this scenario does not occur at the current price levels, we could buy with a target at 1953 in a short term. And finally, here's crude oil commodity asset. Arif Makmur describes. If we look at the weekly chart of the crude oil commodity asset, it is clear that buyers still dominate this commodity, which can be seen from the CCI indicator, which has deviations from the price movements, and at the same time the price movement is in a discount area. So even though there is a potential for a correction to the support level, bullish order block is at the level of 82.46. But as long as the downward correction does not exceed or closes below level 79.43, in the next few weeks it has the potential to appreciate upwards to level 92.19 as the main target and the level 96.44 as the second target. That's all for today. See you online soon and good luck.